Welcome to Pennsylvania in Focus. I'm Anthony Hennon, Pennsylvania reporter for the Center Square. Joining me today is the Center Square's Pennsylvania editor, Kristen Smith. Kristen, you did a story this week looking at some federal action, but some state fiscal watchdogs pushing back. What can you tell us here?
Sure. This is an update on an ongoing story about new federal mortgage rules that took effect Monday. And in effect, what they do is they raise upfront fees on mortgages for certain borrowers. Those borrowers, however, happen to be a very broad sector of home buyers. Generally, these upfront fees apply to people with government-backed mortgages that have credit scores over 680 and over, and down payments in the range of 5 to 20%. So what that means is that they pay a little bit more on their upfront costs, while people who make smaller down payments of less than 5%, no matter their credit score, so even if they have near perfect credit, they will pay lower fees. And so this, as you might imagine, has not been well received by a lot of people because, again, that credit profile is very broad. And I think you can think about a dozen people who buy houses with a financial profile looking like that. So Pennsylvania's Treasurer Stacy Garrity is actually leading the coalition of states who are fighting back against this and calling it unconscionable. Garrity actually, on Monday, she released a statement that says this new policy makes it more expensive for people with good credit to buy houses, and that's absurd. 26 other states, 33 officials signed on to this letter. They sent it to President Biden. They sent it to the Federal Housing Finance Agency director. And it is something that is, picking up steam as far as outrage goes. And what is to be noted about this policy as well, according to federal sources, is that it's actually they push back against the idea that this is subsidizing. This is punishing people with good credit and making them subsidize people with poor credit. They push back against it. They say they've been, slowly retooling this fee structure over the last year. They've raised fees for people who buy vacation homes and investment properties. And so the characterization that this is somehow unconscionable and punishing the working class, they push back against. But the chart from the Urban Institute lays out very clearly these upfront fees are increasing for this specific group of buyers.
Yeah, it seems like looking over the federal response to this is that, it's focused on, these updated fees are not representing across the board increases or decreases. It's talking about the updates only changes the price some consumers must pay. It seems like there's some wiggle room there that, even if you say it's not across the board, you're seeing a lot of people impacted by this. I see this fee structure is starting, May 1st. So it's already in place this week. Is there really that much, that state officials can do about this? Is this sort of just a complaint toward the federal government, letting them know that you have a lot of people upset about this, but it's not really is there much they can do or much even to delay these changes?
I don't think there is outside of a legislative solution, given the fact that, again, about half of mortgages in this country are government backed. Now, in reference to earlier statements that not every person with a government backed loan is going to see these fees increase, the Federal Housing Finance Agency actually spoke to the Center Square and said certain borrowers who use affordable housing programs that are offered by Freddie Mac and Fannie Mae, they will not be included in this. And, there's some other, groups of borrowers that will not see these upfront fees. But it seems like at this point, all that states can really do is complain and push back against this and urge the government to do other things like adopt policies that lower inflation and bring make life more affordable so that people can actually afford a down payment and to save for it. As Garrity had been saying in her letter, she says that this is a backward incentive that basically boils down to a middle-class tax hike. The federal government obviously sees that very differently. One of their big priorities in the last few years is to make home ownership more accessible. And the idea here is by giving lower upfront fees to people with smaller down payments, you're not limiting them from home purchases just because they have a smaller amount of wealth. And it is supposed to help people enter the market, particularly first-time home buyers and other people who are on that lower end of the income bracket or may not have proceeds from a prior house sale. I mean, there's a lot of people who do have smaller down payments, and it's not because they're uncreditworthy or because they are in any way not able to qualify for a mortgage. And that's something that the Federal Housing Finance Agency was really clear on. They wanted it to be clear that making the assumption that this is subsidizing lower credit borrowers somehow paints them as less creditworthy, and they just really think that that's an unfair characterization of how these fees are shifted. Also, what's important to note is that housing analysts who follow the real estate market say that although this is shifting the burden from, from home buyers with smaller down payments to those with slightly larger down payments, at the end of the day, those with larger down payments and higher credit scores are getting more favorable credit terms, lower interest rates. They'll pay less over the life of their loan as compared to other people who are perhaps getting a break up front, but taking out a larger loan with a larger interest rate on it. So in the end, you're not being harmed or punished necessarily by your higher credit score, your bigger down payment. It's just that the fee structure is going to change a little bit, how much you pay up front versus how much you pay over the life of the loan.
Listeners can keep up with this story and more at thecentersquare.com. For Kristen Smith, this is Anthony Hennon. Please subscribe, and thanks for listening.